The White Tiger Night Exponential Moving Averages Day Trading and Swing Trading Tips. This is the White Tiger Night, and this is going to be a video on exponential moving averages. One thing I want to point out here real quick, this is the market. Again, Wednesday, August 15th, 2012. Just look at the volume here. I mean, the volume is basically non-existent. This is the NASDAQ, and it's just basically nowhere. So, I mean, some in the end of the day, in the beginning of the day, but it just basically just drops off completely. Even with these large price moves, even though it comes and reverts basically back right. I think typically on yesterday, it reverted back, but it had a large swing and then a reversion, but really no volume. So it's kind of questionable. And mainly that ties back kind of to the high frequency trading and all the other videos that I've made to this point. And again, this video is mainly just for people who are interested in trying to learn some of these techniques for trading in the stock market. I don't necessarily want people to run out and go throw all their money into the stock market or anything, but if you're interested in learning trading techniques for investing in stocks and possibly day trading, I'm just doing these videos so that you don't have to pay a bunch of money and lose a bunch of money with a bunch of douchebags that want to sell you a bill of goods. So I'll just do quick no-nonsense explanations of some of these indicators. So what we have here is called an exponential moving average. This red here is the 50-period EMA, or exponential moving average. This yellow is the 20-period EMA, or exponential moving average, and the white is the 10-period EMA, exponential moving average. Now this is a 3-minute chart, so these averages are created with the period that your interval of the chart is on. So it's important to note that if you're looking at a daily chart, it's going to be separate than if you're looking at a, if you're potentially looking at some kind of a weekly chart or a 3-minute chart, 5-minute chart, and everything involved in that. Now, one of the best ways to use the moving averages is to find dynamic support and resistance intraday in the market and on daily levels as well. But as you can see here, when the shorter term, or let's just say in this case this is the 50, 20, and 10. So when the 20 is under the 50, that's typically a fairly bearish sign in the market. And as you can see here, when this right here, this 20 period crossed right there below the 50, we had a big old tank, and typically it'll follow it lower. When it broke back near it or almost above, it tried to get near it and started becoming more bullish. But again, as they turned and started slanting downwards, you see really some negative and major selling pressure. In the morning here, you can see the EMA, the 20 period EMA, actually crossed for a moment above the 50, and that signals a bullish trend and begins using it as support to bounce higher. Here it would use it as resistance to fall lower. And as you can see here, okay, we're having this occurrence right now where the 10 period crossed below, okay, the 50. Now the 20 period is going across below the 50, and we're seeing a lot of selling pressure. Now if these guys can turn back around, they could come back up. But at this moment, it's using it, it's falling and using it as resistance. And this is great because it forms a dynamic form of support and resistance throughout the day. And you can just, instead of drawing, all kinds of trends and everything all day, you can basically just look at it real quick, see where it's at, and use these EMAs to determine bullish or bearish sentiment in the market, intraday or even on a swing trading daily level. These are extremely useful on the daily charts, as well as even monthly, weekly, and in the intervals of a single minute, or say a 3-minute, 5-minute chart. And I think it works great for intraday trend trading. As you can see, again, they're slanting upwards. That's a bullish signal to buy, and it bounces and uses as support. And it did that throughout the day. And once this guy started crossing, see the 10 crossed the yellow here, which is the 20, and that's a negative, that's a bearish signal, started selling off. Here again, started selling off. And again, this is a lagging indicator. So these are the price action, the average price, the exponential moving averages of, the buying and selling pressure, or the price action. So, it's a lagging indicator, but it helps you understand the sentiment in the market pretty quickly. So that's the exponential moving averages. Again, you can see they're slanting downwards and negative, pretty negative pressure in the market here. If they turn back around, as you can see here, and pop above it, then they'll typically rise and use it as support. When it crosses lower, it'll fall and use it as resistance. That's exponential moving averages from the White Tiger Knight. Signing out. Subscribe to the White Tiger Knight channel for a chance to win 7 free knives and other cool stuff.